Come on. Sorry.
Sometimes preparation takes a while.
It's called internet hurry up. Redirecting. Done. All right.
Oh, and we have a delay too.
Yeah, so we're muting. So we're live. Oh, there's Russ.
There he
Good to
is.
see you, Russ. Hey, Russ.
All set?
Yes.
Hey,
we are
everybody.
set. We're good.
Hey, Russ. All right, I'd like to welcome everyone to the Tompkins County Industrial Development Agency Finance and Audit Committee meeting. Today is February 24th, and we are here to review a draft financial statement of the IDA and the Tompkins County Development Corporation. We have the folks from Insero who performed the audit. And so I'm going to turn it over to Evan. I'm assuming you're going to give us the lead. So
Awesome.
Over to you.
Thanks a lot. I'm Evan Cleveland, audit partner with Insero & Company CPAs. With me is Rita King, audit supervisor, and then Dwayne Shawn, audit partner. So reason Dwayne's here, I sent an email earlier about the Public Account Authorities Accountability Act. PAAA, which requires an audit partner to switch off after being on an audit 5 consecutive years. So you can't be on it 6 consecutive years. So Dwayne's here. And our plan is for him to take over as engagement partner next year, and then we roll back on the year after to be in accordance with PAAA guidelines.
Mhm.
So having Dwayne join us to meet the audit committee for next year when he presents, and he already knows a lot of you on here.
Mhm.
Great.
And then Rita did a lot of the work.
Also, Randy.
Thanks.
So I'm going to work mostly off of the executive summary, which is this document here. So first page of the executive summary, we intend to issue an unmodified opinion on the financial statements. That's the technical term for a clean opinion. It's the best opinion you can get. Means your assets, liabilities, net position, revenues, and expenses are all fairly stated in all material respects. We also issue a report on government auditing standards on internal control over financial reporting. Again, unmodified opinion, no instances of non-compliance, no material weakness, significant deficiencies. And then finally, we issue a report on public authorities law on investment practices, and that also has no issues noted. So associated with the audit, we did issue a management comment letter. We had 2 observations, and I can go to that comment letter right now. It'd also be in your packet. Pre-audit discussions with the audit committee, we are going to take a closer look at the interactions between the county and the IDA and the functions and responsibilities associated with handling cash receipts and disbursements at the county level. We had a few recommendations based on those observations that we had. So job functions and responsibilities. So our recommendation is to have some clearly defined and documented job functions and responsibilities. So there's been some turnover in the advisor to the board position, the director of finance over the past 5 years since I've been here. So as Rick and then
Lori.
and then
Drew.
yeah, I was missing someone in the middle. So we feel it would be a good idea for the IDA to clearly document and define policies and procedures surrounding receipts and disbursements processes. Right now, they're just ad hoc processes that we evaluate annually, and it'd be good for them to be clearly documented. Also, when I started on this, there was a financial accounting software that was used. Can't recall the name of it specifically. Quicken, thank you.
Oh, I'm for the county side.
Yep. So that sort of transitioned away over the past few years to Microsoft Excel. And just our observations is Excel's flexible, but it lacks built-in audit trails, permission controls, financial reporting functionalities. So our recommendation is to implement a more robust financial accounting reporting software solution. It doesn't have to be something crazy expensive, just something that has a financial reporting built in.
So let's talk about number 2 first. So
Mhm.
then what does the county have a software that can accommodate something like that? I'm assuming you got a really robust one there. But can it accommodate something that we could latch onto that for the IDA and the TCDC or?
I can look into that. I
Okay.
don't know off the top of my head whether they give the options. Some software has the option to have a separate entity.
Right,
Even though it's
right.
one package. The current one that we use, which is called eFinance Plus, which is owned by Central Square. I don't know whether that has that ability or what the cost would be if it did, but I can look into that.
Mhm. And so previously then, we used to have Quicken for that. Guess we could consider a QuickBooks.
Yeah, there's not a
QuickBooks
not a ton of activity for this entity, and there's something like the county and the humongous software that they use. But yeah, QuickBooks Online would be pretty useful.
So I can add a little story to that.
Okay.
I wasn't aware of it till after Rick left. However, Rick had Quicken on his computer, on his laptop, county
Okay.
laptop. It was a client version installed on it. And once he retired, his laptop went away and we held on to it for as long as we could, but we were urged due to policy to return it to the county IT department. And with it went the software.
Right.
Lori Scarrett, being the director of finance after Rick, kept track of the IDA in Ontario using Excel. So for a quick solution, she just used what she knew and used that to keep track of it.
Why couldn't they just swap over that license, like for Lori to be able to use?
I am not sure. I just know some of the story. As to the exact reasons, I knew it was something loaded on his computer. I knew of that because we held on to it. Because of that, that was one of the reasons.
And just to clarify, this is just a management comment, so it's not like it's a significant deficiency.
Yeah,
or
it's
anything like that.
control deficiencies.
Yep.
They're recommendations for strengthening controls and just general observations that we've had.
Then Daryl doesn't have to do a spreadsheet in Excel.
Are these new observations this year, or have you made these observations before?
Newly written associated with Excel. Over the past few years, it has been in Excel. Just a recommendation this year as to implementing something new.
We had a pretty robust discussion when we had our prelim meeting in December, I believe, about kind of the concept of, okay, how do we as the IDA take responsibility when the county is kind of managing our finances and everything like that. So we asked Insero to take a little bit more further dive into, honestly, we only have cash receipts and cash disbursements in here, so it's pretty straightforward, but we just felt like we wanted to take a look at that a little bit further. So, okay.
Sorry, I laughed at your assumption that the county's software was robust. The county has been struggling
Okay.
with our software.
It is an antiquated software for many reasons, which I can go into if you need.
Really want to piggyback on what we've got.
I can look in to see. I think it would work. My hope as director of finance for the county is to find a new software in the next 3 years, give or take. But I mean, if it's an option, I can look and make the decision later.
Or if you have any recommendations that.
Quicken was easy to understand for us. And then QuickBooks Online is also a good option.
Yeah. Why don't we do this? Why don't we put in the 3 of your courts and maybe give you a couple months here, and if you could report back to the committee and explore whether we decide to go with a QuickBooks, whether the county can, to your point, Daryl, can add on a quote another company to do that, or maybe we just decide to stick with what we've got as well. Although I know it's not robust, it's not a significant deficiency, and it feels like because we've got cash receipts and disbursements, we do have some controls over that. Maybe that's an option as well. Obviously, QuickBooks Online will come with a cost for us. So if you can do that and maybe report back to us by the June, would be great. And then the first one, the job functions and responsibilities. So we have a separation of duty. Obviously, we've got check signers. So I believe Deborah's a check signer, and I think I'm a check signer as well. So we've got that. So your more point there is we need to define our role between the IAED staff, staffing the IDA, and what the county is doing as well.
Yeah, mostly just getting these written down, what the procedures are.
Okay. Is that something that you feel you can tackle a little bit? I mean, I'm anticipating a robust 50-page document.
I was wondering if the MOA would satisfy part of that. The relationship, like the agreement that we have an annual agreement
Yep.
between IAED and the IDA that we will contractually provide services. Does that meet the requirement for part of that as far as INAs and?
It could define responsibilities for specific areas, but it also doesn't really address the county's involvement in it as well.
What kind of document are you imagining?
Just a paragraph of here's how our cash receipt process goes. The board approves.
That should be simple enough.
Yeah,
I would-
I'm not anticipating it.
Yeah.
One pager that just.
Anna's been raising her hand for a while.
How, receipts that we receive, how is it processed? Who's responsible for processing that?
That'd be a separate MOA.
I don't think so. I think it's just defining how the IDA is handling, whether it's IED staff. And in my, correct me if I'm wrong, but my anticipation would be we wouldn't want to necessarily use current names. We'd want to
No,
use
correct.
The title.
title.
Sure.
Yes.
Okay.
With that. So if we could put something together like that, and that may take a little bit longer, but we could have it, maybe by end of summer or something like that, just to kind of a rough document there for us to do a.
Letter agreement.
Yeah,
Yeah.
yeah. Just so to your point there is turnover, and whether it's at the admin side or the county side, it would be good to just have a document. So good suggestion.
I know.
I just had a quick
Yes.
aside. The IDA does actually have an internal controls and financial accountability policy that they adopted in 2021. It sort of is a very high level. I think what you're looking for. It doesn't dive down into IAED as the administrative organization does this and the county does this, but it might be a good way to jump off and then do a little more definition. It sort of says, this is who's got oversight of this and this is who's going to do that.
Yeah.
It doesn't really get down to, oh, Ina gets the check and but it does talk about me receiving, setting it up, making copies, transferring it over to the, so that's much higher level, not a deep down kind of
Well,
a
let's do
thing.
this. Let's take this and let's add probably bit more detail on behind it, because this looks like it's more generalized, and then let's put it a little bit more deep dive into
Yeah.
that, and then run it by us,
Okay.
and then we'll have Insero look at it next year then for us. As part of
Good.
their next year's audit.
And Russ, would you want to review this? I'm assuming.
Yeah, I think it would be a good idea just to pass it through legal counsel, and if it is sent to me, just make sure in the ray line that it's labeled as privileged and confidential. And then, I'm certain it'll be fine, but I think it'd be good for us to have our eyes on it at least.
Thank you.
Great. Sounds good. Okay, Jerry, any comments there or? Okay. Great.
Sorry, I'm good. Yeah, thank you.
Okay, thanks.
So jumping back to the executive summary, through our periodic discussions, we were to add something to the executive summary surrounding our review of the receipts and disbursements processes at the county. And we did review those processes. They indicated that they had appropriate segregation duties within the cash receipts and cash disbursements processes.
Good.
So next page, we're required to communicate with those charged with governance at the conclusion of the audit. We do so through a specific letter. It's in the packet, so I won't go to it specifically, but we didn't have any comments of concern associated with any areas. So with one new accounting standard adopted, GASB statement number 102, certain risk disclosures. That didn't have any impact on the financial statements. We did add a blanket disclosure that they were evaluated and nothing was required to be disclosed. We can get into that when we get into the financial report. No comments of concern. That definitely kind of didn't look like a C on concern, but I had to zoom in a little bit. It looked like it.
It does look like an E.
Yeah. So next few pages are snapshots of your revenue and expense over the past 2 years.
Okay.
I'll turn it over to Vita.
Revenue and expenses, this is the combined, the IDA and the DC. But your revenue is pretty much stayed the same. You just had a little more other revenue this year compared to prior years. And then your expenses stayed the same, 2% difference. So then starting on page 7, this is again the combined IDA and DC assets, and we have a 5-year look back. So in 25, your total assets did decrease about $456,000, which is roughly 19%. A lot of that was in the administrative fees receivable, which are essentially what you are still owed at year end, and then really just a true result of operations during the year had decreased your cash and cash equivalents. At the bottom, for the first time, you have a pass-through funds payable, which is for the Carrollmore Solar. It's hope I said that right. Deferred revenue.
The low-key bill.
Yeah.
Yes,
Monitoring for the.
that's just sitting as a liability this year.
So just as a, so we received that before year end and you're just passing that through.
Correct.
On page 8, at the top, we look at the net position. Again, your net position is down about $460,000 due to your operations. And there was a significant decrease in the future commitments this year compared to prior years. Then at the bottom, we look at your revenue. So your administrative total revenue, decreased $170,000, which is roughly 37%. And that's really a lot of that's in that administrative fees, just less project fees this year compared to prior years, which always fluctuates. On page 9, we look at the expenses. So your expenses this year did increase about $40,000, just about 6%.
I'm sorry, I just wanted to make a note on page 8 there, the interest in there, 3,000. So we did, the IDA did invest, so we now have interest. Do we have any sense as to what type of interest rate we're earning on that? Is it close to 4%?
It was just under 4%. Yep.
Okay, great. Okay.
On page 9, your total expenses, the increase, you had an increase with your administrative, but then also the investment in the economic development, which gave your excess of expenses over revenue of $459,000.
Yeah, I had a question. If somebody can explain to me what that investment in economic development actually consisted of, who got it for what?
Does that include the funds that were given to like the farmers market and Finger Lakes Reuse,
Yes.
those types of things?
Okay, so this is money we gave away.
Yes.
Mostly on the development corporation side.
Okay.
Yeah.
And also like the economic or the IDA sponsorship.
Right.
Yeah. Of that 254,000, 240,000 of it is with the development corp.
The Finger Lakes.
Yep.
Friends of
Okay.
Farmers Market, Finger Lakes Reuse.
Now, the next couple pages, we break it down in between the individuals. So page 10 are we're starting with the IDA itself. Your total assets is down about 216,000. Again, you have what you still have to receive is down, and then your result of operations with your change in cash. That shows the liability. On page 11, looking at the net position, it's down about 220,000. Again, result of operations. then when we look at the bottom for revenue, so the IDA revenues itself are only down about 86,000, which is about 23%. Again, your administration fees, you did have the increase in interest, so it does help. Page 12, we have the expenses. And so your total expenses for the IDA did increase about 49,000. And that's where, if you look at that investment in economic development here, that's the remaining 14,000 from that 254 that we previously looked at. So you had a excess of expenses of 220.
So what was the 14,000, Kelly or Ina? Does anybody know?
IDA Academy.
That was 5,000.
Are you including our directors and operators insurance page? I mean, we paid about $2,600 to the attorneys for the Arrowhead, some last minute stuff. I'd have to look at my
Yeah,
spreadsheet.
we might need.
I don't have it.
Yeah.
Specific on that one too.
Yeah, those are very specific. We look into that.
Then on page 13, we take a look at the development corp. So your total assets for the development corp decreased about 240,000, just over about 51%. And that's really due to your change in operations. There are no liabilities related to the development corp. Then on page 14, your net position, again, it's the same change. Have assets in your net position. Your revenues at the bottom went to zero essentially. You have $86 in your interest. Because you didn't have any projects or anything that related fees for the current year. And then on page 15, looks at your expenses, which is a $90,000 increase because you gave $90,000 more towards your investment in economic development during the year. That's a lot of numbers. If any questions besides the 14,001?
Which I will look up for you.
Are we gonna go through the actual financial?
Yeah, absolutely.
Okay.
So we'll touch on this one last page, the current and future accounting standards. So like I mentioned earlier, it's GASB statement 102 was implemented. We have two more coming up next year, 103 and 104. We did discuss 103 at the pre-audit meeting, but that is going to change around the management's discussion and analysis significantly. Going to add a lot more verbiage on year-over-year changes and describe the financial statements a little bit more in detail for an average financial statement user. I can definitely tell you the first time I looked at a management's discussion and analysis, I did not understand a single word I read. So this is for the first time users when they pick it up and read it. So it's going to change that around a lot. It's going to add multiple pages information.
Okay.
And 104 is capital assets. And I need to capitalize that C in capital assets there. It's things you notice at the last minute. That won't have any impact on this entity in particular. It just changes around disclosures of intangible assets and capital assets if you had leases that needed to be recorded.
Okay.
So I'm gonna jump into the main financial report and do the footnotes.
Before you get that far.
Yeah.
I asked a question on page 7. So, remind me what the correction of the error was for fees, $102,000.
We're going get that one when we arrived at the footnotes. So
Oh, sorry about that.
nope, it's all good.
Stealing your thunder.
No, thank you for pointing it out. So when we were evaluating the revenue transactions at the beginning of the year, we were looking at one transaction and had a few more questions about when it closed. So when the project closes is when the IDA can recognize revenue, and it was December 27th, 2024. So meaning you should have recognized revenue in the 2024 year, whereas it was recorded in 2025 at the beginning. So we're just bringing that back into 2024. And when you restate, it falls into one of three categories. It is change in reporting entity, change in accounting principle, or correction of an error. So by default, if you're not the first two, you're automatically the last one.
Can we recall what that project was?
Top of my head, no.
Um,
Look it up.
Staley?
Oh, the
Stately?
Lately. So it's a pilot only, and they probably closed on their legal documents the very end of December, and then a check was sent.
So,
Correct. Yeah. So the cash receipt
So
arrived late January, early February.
okay.
Add it back in.
It's a very good question.
So why do you add it back in?
they just want to put it in the right.
Yeah. So yeah,
It was technically closed in 24, even though we got the money in 25.
so you add it back in now because it doesn't belong in the current year under audit.
And in terms of that, like, so.
Not an
with
account.
that, do you guys do some type of, like testing for the first?
Yeah, we do a
Cash
subsequent
Receipts?
search of cash receipts.
Okay.
And I don't think it fell within our specific.
Maybe because we received it in February or something, you guys just.
Yeah, we schedule the audit pretty aggressively early on, and sometimes things fall outside of that selection period.
We didn't approve anything at the end of this year, did we? Oh,
We did ask.
We caught it.
the solar project, right?
Yeah.
At, our December meeting, right?
Yes, so the thing is, so Yellow Barn Solar was approved. It has not actually closed.
Right.
So we didn't have anything closed towards the end.
It hasn't closed.
So we received the
We received some money for it, but it hasn't closed.
administrative fee for Yellow Barn, that 25,000.
Yeah, but it still hasn't closed.
Right, but it hasn't, the rest.
We received it in 25.
In 25.
So should
Yeah.
that be,
No, actually, we've got it in 26. We got it this January.
okay.
Okay, thank God.
Yes.
Yes,
Okay.
so
Because I don't know how you'd act if you got the money before the thing closed. Is it cash or accrual?
It'd just be a prepaid liability.
it's 25,000. It's
Well, not being an accountant, I don't know what to do with those.
for an invoice, but haven't gotten it yet.
Revisit that one. We currently have that as an account receivable under the IDA. Our understanding was it did close and that you earned.
No one has signed any legal documents yet that I'm aware of.
Mm-mm.
Okay, so that might move to a different asset categorization
Wait, so we have it as an asset right now on the books, correct?
Yeah.
Yeah.
That meant-
Did that, and we probably are offsets revenue, but probably haven't earned it yet, have we?
correct. So that we would most likely need to pull out of revenue and move to a prepaid.
Would that change the bottom line?
Saying in advance.
Yeah,
So we'll recognize the receivable.
sorry, an unearned revenue. Yeah,
Unearned
right.
revenue, Right, okay.
So does it change the bottom line?
It will
Yes, it will by,
reduce it by the 25 or whatever thousand. And we'll recognize it 26.
But if we received it in 20, whatever.
yeah, so it depends when
Is it
the
account-
project closes technically, from our review of your.
Counting people at this end of the table.
And so really the thought process there is, so it was at the end of 25, we didn't get it until 26. We haven't earned it yet. So we
So,
knew it was coming. So
It
we're
didn't-
gonna book a receivable.
Yeah.
And our would be the liability.
so it was initially deposit in transit on the bank statement.
Okay,
So we'll have to move it from where it currently lives in accounts receivable out of there and out of revenue. And then I'm gonna have to think about this one a little more.
Double check. We'll double check on that one.
because you were depositing it at the end of the year?
I don't think we actually received it till
I think-
January
Yeah.
26. So it was deposited in 26.
Couldn't be a receivable
Yeah.
or deferred. If it's all 2026,
Yeah,
maybe it doesn't belong in the asset.
Maybe I'll move it completely.
And not,
Well, good, now I'm not confused.
Well, it'd be less confusing because you won't see it anywhere, right?
Till next year.
Obviously, if you could take a look at that and let us know, what you want to do with that.
Yeah, well, we'll definitely shoot you guys an email on
Yeah.
what we ultimately do with this amount.
And I'm sorry, so why were we getting a $25,000 advance? I'll call it.
Russ, do you want to touch
Sure.
on this with, we wanted to get them, Russ and team had done so much work that they wanted to get their end cleaned up and have $25,000 kind of as like a good faith. And Russ, if I'm speaking incorrectly.
No, you're exactly right. Jeff, if you remember the history that is continuing with Yellow Barn, we finally got to the point and said, look, you guys have to have some skin in the game. And if you're going to sign the agent agreement, which they still have not signed, you should pay a portion of the IDA administrative fee. And
Okay.
they agreed to pay $25,000 and get caught up partially anyway on the legal fees. I've had ongoing conversations with them. There's no indication that the project's not going to happen. It's just a monster project with a lot of moving parts and a lot of attorneys and accountants involved. So we decided, hey, look, if you guys want to proceed, we need to receive $25,000 for the IDA by the end of the year. And it showed up, I want to say January 3rd or 4th, something like that. Because Zoe, I believe, was traveling, Kelly, if I recall correctly.
Yep.
So that's where the $25,000 came from.
Right after.
And it'll just be treated as a credit upon the closing.
Yeah, that'll be credited. The
Yeah,
amounts they've
basically.
paid will be credited upon closing, which supposedly the first tranche will happen in April, and then supposedly the remainder by the end of the calendar year.
If it doesn't close or they back out, do we have to refund that, or is that a
No.
non-refundable item?
No, it's non-refundable.
So what's their total?
Their total fee to the IDA is almost $4 million. More than $4 million.
It's a lot of money.
Well, then we don't need to worry.
Is this are we in public session right now?
Drinks all around.
Well, don't count your money before it's in, because this is a big project.
Your fee as well, that 4 million.
That includes everything. So just so you know, that they very well may ask on the larger projects that our firm has been involved with, and we haven't offered this up, is they may ask for that to be paid over tranches. And if they ask for that, we'll have to consider.
I know more now than that.
But just it's clear, so we didn't get the cash by the end of the year.
Correct.
So I would say that, since we didn't get the cash by the end of the year, let's just remove
Yep,
it
correct.
completely from the financial statements. It's not like we earned it. It's just
Something that arrived.
Yeah.
Yeah.
Taking it out.
We're
of-
taking that out of the administrative fees,
Yep,
correct?
and revenue.
And
Well, yes.
and Jeff,
Okay,
to be-
so it's like 249 something.
Yeah, and Jeff, to be clear on the $25,000 payment that you received late, if you will, I don't think it was anything other than their processes internally on their from their finance group.
Yeah.
So it was just a timing issue
Mhm.
more than anything else, is my understanding. It was
Okay.
supposed to be in your books, in your accounts by the end of calendar year 2025, and it came in a few days late.
Okay, great.
Yeah.
Okay, so you guys will make that change then. If anything. Okay.
Okay, so I was going to jump ahead to page 12 of the financial statements. So we have these two notes 2 and 3, regarding bond and note transactions and tax abatements. So these are highlighted in yellow, as Ina's still working on gathering all the information from the confirmations and correspondence that's sent out to all the individuals, businesses that have outstanding bonds and notes. So once we have those final numbers, we'll finally be able to get these updated. So these have not been updated for 2025 yet. Note 4 is your deposits and investments. So at the end of the year, you had 1.5 million for the IDA and 139,000 for the corporation in bank deposits, and those were insured by FDIC and collateral. Note 5 is your equipment contract receivable with the Knickerbocker Bed Company. So that's the interesting transaction where if they create 176 full-time jobs, they buy back their equipment for $1. But we don't know that yet until the end of the agreement, which is February 28, when it's reevaluated. So we booked a receivable based on the agreement. So it's depreciable over a 7-year period on a straight line basis. It's what they could buy it for if they don't meet the 176 full-time job requirement. So we won't know that for a few more years.
Before you're on the IDA.
Yes. They spent $500,000, and assuming they create 176 jobs, we're gonna get $6 back. Why did we do that?
It was a way that we can incentivize them to, as part of the package, that we could incentivize them to move into that facility.
Okay,
It's, deal at the time that made a lot of sense, so. And if they create 176 jobs,
yeah, I mean, that's great, but
Big number.
Continuing on the next page, note 6 is your loans receivable or loan receivable with Ithaca Downtown LDC 2 for $90,000. So $30,000 was paid at the inception of the loan, and at the end of this year, it was $90,000, the total for the loan receivable.
And we're coming up to the point where the board will need to make a decision on what to do with that loan. Because they're reaching at the end of, I believe, March.
June or July. In
Oh,
the loan agreement, it has to do if someone comes and buys a property, the loan can be paid back. The board could decide to forgive it.
weren't they supposed to come in and give us a report and they didn't?
I
I
think,
think they did.
yeah,
Was that
Yeah,
the?
you were
Oh,
not
December
the
meeting.
IDA.
Okay, so they've already
Yeah.
given us that,
we might.
We're gonna reach out and
Want
see.
to them on the agenda for April, maybe?
Yeah, okay.
And find out what the heck's going on.
Mhm.
Continuing in the notes, note 7 is related party transactions. So it's the amount the agency pays the IAED for economic development and marketing services. Note 8 is commitments and contingencies. So we have commitments for next year for IAED management fees, as well as housing study for 75,000. Contingencies is just a blanket disclosure regarding risks for entities. The next page at the top, this is our blanket disclosure regarding GASB Statement 102, certain risk disclosures. So this was the concentrations and resource constraints GASB. So we did evaluate a lot of concentrations and constraints associated with this entity. So fee income being a significant amount of revenue, we did evaluate that on whether any disclosures were necessary. However, based on the number of projects that have been occurring that we read about in the minutes, nothing would cause a disclosure for that specifically. Additionally, we looked into the IDA limited to Tompkins County itself. Nothing here to require disclosure under the standard for those. So we have a blanket that nothing appears to cause a substantial impact requiring additional disclosure. So just to give an example, say your fee income is 99% of your revenue and we read about no projects in your minutes, then we would totally have a disclosure about that.
I have to say, with the marketing services, I've had multiple people say they've heard me on the radio talking about the IDA. So, Dave Franklin being one of them.
And then note 9 is the restatement that we covered earlier that it pulled the 102,000 into 2024. And the subsequent pages are the schedules of indebtedness and projects that haven't been updated. Then the final few pages are our report on internal control of financial reporting, and then our report on investment practices that have the unmodified opinions. And so Overall, the audit went really well. We greatly appreciate Daryl and all his efforts, stepping into his new role. Finding out, surprise, you're going to be on this committee too. Thank you very much to Ina as well.
You guys are great.
We'll open it up for any questions about the audit process or anything else that ask us about the audit report.
It's me again, the dummy who doesn't understand accounting. A note on commitments. Which said that these future commitments, which are the 483,320 plus the 75, leave us with an unrestricted net position of 1,342,030.
Correct.
Okay, that I can understand because you subtract those two things from the 1,674,494, I guess. That's on page 6, the statement of net position. Right? Oh, it's 1,670,000. Yes. But then it says less future commitments of 558,320. Didn't we already subtract the?
Yes, it is worded a little oddly, and I feel like we could clarify that a little bit more.
So it is 1,342,000.
So it's the 1,342,000 is already subtracted out the 558.
Is the 1,670,884 minus the two commitments? Okay.
Well, it's actually the combined development corp. 290,350 less the 558 gives us a 1,342 on.
Yes, that's what it is.
Okay. All right. Thank you.
We could reword that if you would prefer.
Well, I just think that it suggests that you got to subtract those twice to somebody like myself who doesn't.
Yeah, I think we can reword that.
I think if we get rid of that last part, like this.
Just all you have to say really is that it leaves an unrestricted net position of
The above.
Can we just say unrestricted that so that we infer that it's both the IDA and the development corp?
Yeah, and then I can X out the less future commitments.
Right.
Okay. Good observation. Thank you.
Thank you. They're going to throw me off this committee.
So Ina, remind us, what is our here in terms of, you've got to have this report filed by March 31st, right?
Correct. So New York State requires that all of this information is loaded into their PARIS, the Public Authority Something System Reporting Information System by March 31st, their close of business. Obviously, my aim is to do that prior to March 31st. For both entities, the Development Corporation and the ID, there is a series of reports. Whatever. So I've actually will start this week on some of more of the administrative filling in stuff.
And that includes obviously information to get through 17.
Correct. So there's some financial, there's some stuff about the board and what we're doing. But the majority is on projects.
Okay. And prior to you submitting that, you need approval from the IDA board.
Correct.
Which will have a March meeting. So
yes,
at this meeting, then you need to approve it subject to the changes.
Yeah, it's fine.
Discussed. And then that way, because we won't have another committee meeting, subject to the changes, and then Insero will make these changes, and then you will present to the full board and the March meeting, which then that board will, it may not even be completely correct.
It will be
We'll approve it subject to any further changes at that meeting then, correct?
Correct. And more than likely at that meeting, the only additions will be a few job data. We already have all the bond information. I sent that to Rebecca. And we will have all the sales tax examination. So we'll have all the numbers that go into here. There may be, and I'm working very hard to say there will be zero, we'll find out, projects that have not yet received. But I mean, they're coming along. It's much better than years past. But I still have a few stragglers. I'm just encouraging Slate to send me their.
So, but I'm confused again, because you said in the email when you forwarded these documents
Yeah.
to us that pages 16 to 18 were 2024 figures that were put in here as placeholders.
Correct.
So.
So what we're gonna do is we're going to, so what I would ask Insero, so you're gonna make several changes and before you provide us the next, so to help us as a committee, what I'd ask is that you provide us a summary of the changes from this financial statement to the next one that you're gonna present to us at the IDA board meeting in March, just so we as a committee can get a comfort level. We today will need to vote subject to the changes, and then obviously it's up to us to review those changes to make sure that we're comfortable with it. So I think, given it's the two of us, we probably need to make a motion that we're approving this.
Well, there's Jerry too.
He can't vote.
He can't vote?
No, he can't vote.
Oh, you're just a fly on the wall, Jerry.
I am useless.
So I think we probably need to make a second. You'll move it that subject to the
Changes we
discussed changes, that we will approve this and then it will go to the full board at the March meeting.
Yes,
Does
and
that make sense?
What time is the March meeting?
2:00
2:00.
on the 11th.
And I will give you my most up-to-date schedule of projects prior to that. You tell me when you need it.
Okay.
And it can be in that so everyone can see it and what's missing.
Probably be good to get it sooner rather than later because we.
I sent you my most recent one, Sterling, today.
Today, okay.
So that's the most recent, though.
Okay.
There will still be a few extras because I'm still getting the sales tax stuff. So I will let you know that.
So in that summary then, Evan, if you could provide us what changed from our discussion and then down below what still needs to be done in the financial statement, that'll give us as a committee a comfort level.
Mhm.
And then you'll present at that meeting, our full board will approve it, subject to any further changes and then go from there. Okay, I'm sorry, you need to make a motion and I need to second it.
I move what he said.
Got it.
I will second that. All in favor? All opposed? Okay. It is passed.
Excellent.
Okay, great. Is there any other business that comes before the committee today? Do we have anything else?
Hmm.
Okay, great. Okay, probably need to make a motion to I'll second it.
All in favor?
All in favor? Okay, we are closed for today. I appreciate the time and appreciate the information you've provided to us. Russ, Jerry, thanks for chiming in. Jerry, we're sorry to get you off the golf course.
Keep Russ.
Russ, can we keep you? Ina, can you keep him?
Sure.
Yeah, and I, Jeff and Jerry and Deb, I apologize. I won't be able to attend more than likely the meeting this Friday. My colleague Steve will be there. I just have an appointment with my wife that I can't miss. So I'll hopefully be available virtually for the first part, but won't be there physically, unfortunately.
No problem, Russ. Good luck.
Yes.
All right.
Thank you.
Appreciate the time.
Much.
All right.
Take care, everybody. We'll see
Okay.
y'all. See you
Take care,
Friday.
Jerry.
All right, we'll leave the Zoom up.
Extra minute?
I'm sorry, what?
Do you have a few extra minutes? Okay, I thought maybe since it's been a couple weeks since we,
That's the agenda.
okay.
Yes. Friday, we're talking.
Let me just make sure.
Details from Tompkins Community Bank about your electronic signatures.
Yeah, I,
I signed it.
Okay, would you like to sign this then? Either one of you.
yeah, I filed,
Okay, now I will check to them to see what.
Yeah. I dropped some documents off
Okay.
in person a week or so ago and they,
Both signed.
Yeah,
Should be.
I can definitely take that. Thank you. And I will move, I have others I will be sending to you.
Okay, that's fine.
Thank
I'll
you,
just
Daryl.
put
I
them in-
really appreciate your help.
And I will check on hers as well, but.
accountant,
Also.
I am.
oh,
Don't hold it against me.
No, I don't hold it against you. It's just.
If you're talking
this
to
was
someone.
humble.
I'm getting.
I mean, I spent 2 hours going through this stuff.
No,
I don't deal with nonprofits.
I know you
I can
can see it. That would be.
We're not profit side, so sometimes this is foreign to me as well, and I'm like,
I mean, whatever you think is
But
best.
I know.
Yeah, but if you don't have any kind of an accounting background, it's like.
That's true. So if they're okay with it and I need to sign something,
Yeah.
if not, they can just send me the thing.
I will
Do you want me to be here or no?
I don't.
You don't need
No.
to unless you desperately want. to.
leave and give me.
Like your company, I like your company, but have fun. So I'm available if you have any questions. Yes, thank you.
Thank you.
You're welcome. Thanks again, Sarah.
Spiffy bag.
Yeah.
I like that.
Yeah, we got it for all of our employees. It's really nice.
We should do that.
It's good for, it's nice and stiff in the back, so it, for
Protect your
stuff like
computer.
that.
Yeah,
it does.
yeah, that's nice. I have that one. Hi.
A pink one?
Mhm.
Of course, you're a girl.
Thanks,
Thank you.
Daryl.
Thanks,
Have a good
Daryl.
day. Afternoon, wherever we're at right now.
So the main thing I wanted to ask you, Russ, is I was really distressed when I saw how much money we've given away and where we've left the TCDC. And I kind of wanted to talk about that a bit at our meeting on Friday. And I didn't know if that was appropriate, if there was an appropriate exception under the open meetings law, because I don't really want to talk about the fact that the TCD is broke.
Yeah, no, and Heather and I have talked about this over the, prior months. I'm sorry, Kelly and I talked about this over the prior months. My apologies profusely.
Yeah.
I'm just getting over bronchitis and I'm sleep deprived, so I apologize.
Okay.
So, the things that the LDC are doing that are doing with their money is, from an optics standpoint, in my view, and I'm just the lawyer, are good. You're giving money to the farmer's market.
Yeah.
And elsewhere, but there's really no return on investment. And
That's exactly right.
and the deal flow that the LDC had been accustomed to for a number of years, many years, were bond transactions with the university and other not-for-profits. And that's until recently that there could be some pickup there, but that's kind of dried up for a number of reasons in Tompkins County. The bond market has gone soft the last number of years, and the university's been using the state issuer for a number of reasons. So that revenue source is kind of dried up. That being
Russ,
said,
I'm sorry to interrupt, but do you see that around the state as well? Like other agencies that have a development corp similar that I'm assuming all the university towns are probably using the state agency, so it's really just nonprofits, right? Then
yeah, it is not. It's not unique to Tompkins County.
Okay.
The general deal flow for 501c3 organizations is slowed. We see it picking back up. We're closing a deal with Hobart in the coming months. We closed a deal in Genesee County, which is a similar, not similar, but same size county, kind of as Tompkins, where we closed a multi-county deal with Rochester Regional Health. And so it's picking back up, but that was primarily and really is only the source of revenue that an LDC, be it in Tompkins or elsewhere, would have, unless you're investing in property, development, that type of thing where you can see a return on investment versus, giving money away or granting money to the farmer's market. And I think there were a few others that it's certainly within your discretion to do that. It's just, now the kind of the light bulb I think has gone off. Oh my gosh, the LDC is kind of out of money. Yeah. I think, Kelly, you said there's $30,000 or something.
I can't remember, and I don't think we have financials. Oh, we do have
Yeah.
financials.
Yeah,
It's like 100.
and while you're looking at, and Deb and Jeff, I don't mean to be an alarmist because really, The LDCs were set up in 2000
139,000.
Okay.
primarily to take over the bond issuance that the IDAs can't do for not-for-profits because of a statutory change. So really, that's what they were formed to do. And so you had some money sitting around, like, what do we do with this money? And most LDCs don't have a lot of money either. It's just that you guys, Tompkins County, is investing their money and kind of giving it away for community purposes, and that's okay. But you're running low.
But not if we don't have any income,
Right.
and we don't, it doesn't seem like we have very good prospects of having income. So my question initially was, do we even need an LDC?
Yes,
But yes, we do.
you do need an LDC for if for whatever reason the university or some other 501c3 decides they want to borrow money on a tax exempt basis and keep it local, you would need an LDC because the IDA can't do that under current law.
I think the biggest, obviously for us, I mean, the universities are probably out now because of the state, but it feels like maybe like the hospital, obviously with the hospital's growth, everything like that, they need, so when Russ was talking, I was thinking it probably makes sense for you to try and capture someone at the hospital to see, hey, what is their future plans over the next 5 years? Do they anticipate borrowing and kind of remind them that
Are they a
we're
good
here.
bet?
The what?
Right now, I know.
Are they a good bet as a borrower?
Are it just the four of us right now? It's just
Yeah,
the four of us. Yeah, CMC may come around, but I know, and Kelly can attest to this, that we've been dealing on the bond side, on kind of the periphery on some of their bond issues that have come through the LDC. They're not financially solid.
No.
I wouldn't lend them money, but
And we
So,
just did a
It might-
refinance.
We
for
don't
them.
lend money. It's a flow through for us. So
no, well, that's true.
But I know a lot of banks are staying away from them right now.
Yeah, they're in
They're in
deep doo-doo.
Yeah, they're not very solvent right now.
but that being said, that could turn around, and there's other not-for-profits, and Kelly,
I know, I was thinking of actually going through the list that was included with the financial report that Evan and his team provided, and just reaching out to the not-for-profits on that list and see, just
the reality
making them
is
aware.
in Tompkins County, there's only so many nonprofits that would borrow enough
Right.
for them to need the development corp anyway. So
Mhm.
we've got a limited market anyway.
Right.
With us, with the universities out, it's really the hospital and only a select few nonprofit organizations.
what options do we have to?
Well, and
Beef up
Kelly,
their bottom
Kelly,
line.
more to your point, I think it would be worthwhile, if for nothing else, to get, the LDC's face in front of these not-for-profits to do a roadshow. And I'm happy to come down and travel around with you and have meetings with their CFOs and whoever you think might be appropriate. Say, hey, look, we're here. And even if you have a smallish deal, whether it's a refinancing or a capital improvement project, we may be able to help you and save you money.
Yeah, I mean,
And you have nothing to lose by doing that.
I agree. Looking at this list, I mean, we have Cayuga Med, they're out. Ithaca College, no. Francisca Racker, next year, they'll be at the end of their bond that they did. TC3 Foundation, they're not super great, but Kendall, that could be worth a visit, possibly. And the William George Agency. I don't know what their financial picture is like.
What about the big housing up on South Hill? What's
Southworks?
no,
No.
the retirement home.
Longview?
Longview, that's it.
Okay.
Yeah.
Yep.
Haven't they used us before in the past?
Yeah.
So, yeah.
Yeah, it's been a number of
Yeah.
years, Jeff, but they have used us in the past.
Yeah, I thought they did.
And
So,
Russ
yeah,
also
Kelly-
had a good point,
Go
sorry,
ahead.
just
Go ahead.
about the disbursement of the Yellow Barn funds and what could be done with those.
Yeah, and so we've talked about this, and I know that there's kind of this unwritten agreement that if the Yellow Barn transaction actually closes, that the IDA has agreed to use the LDC to fund certain economic development projects for the two towns to the tune of $500,000, which is fine. And you can do that.
I didn't realize we were going to run that through the development corporation. I thought
Yeah, it has to.
it has to. Why?
Well, it's easier if you do it through the development corporation because there's more flexibility as to what you can do with LDC money versus IDA money.
Okay.
So in other words, to give you a perfect example, the farmer's market, if they came to the IDA and said, hey, we want 50 grand to do improvements to attract people to come, the IDA can't just give its money away.
No.
It can't give grants or loan money or give it away. So that's why I went through the LDC. But that being said, you're certainly within your right as an IDA if you wanted to fund the LDC, so long as it's in furtherance of the IDA's purposes, to make that money available to the LDC. But again, it's mirror boards, and with the exception of granting and loaning money, there's really not any significant limitations as to what the IDA can do with that fee or those fees. So the LDC is really just on the sideline for purposes of doing tax exempt bond deals if and when they come. The economic development arm is the IDA. And if there's ever a circumstance where you wanted to give money away, for lack of a better way of putting it, you can kind of structure it through the LDC as a sister entity. So I wouldn't be overly concerned with the fact that the LDC has no money. Yeah.
Well, but I do want to emphasize to the board that we're no longer in a position where we can just be giving money away.
No,
Because it just seems to me the last couple of years, we've given a lot of money away.
there was
And
the
I didn't
farmer's
realize
market.
what that was doing to the bottom line, for some reason.
Yeah,
think
and
it's-
Deb, I'm certainly not an accountant, but again, I really wouldn't worry about it. There's really no overhead associated with the LDC. You're kind of a standalone entity for purposes of tax exempt bond deals if and when they come, and we're cautiously optimistic that deal flow will increase in the coming years. But really, the LDC doesn't do much, and so there was some money sitting there. The farmers market and others became aware of that and came and asked for it. And I'm not questioning whether it was the right decision or wrong decision, but it was
No,
certainly
I'm not
within-
either. I just think that we ought to be putting out the message that door is closed for a while until either the IDA replenishes the LDC's funds or
Projects come through.
bond projects come through.
Yeah,
I think it's important. So I was just gonna add, Russ, to your point. I mean, Deborah, I would look at these two funds as a combined fund. And I know, yes, the Development Corp's only got the 139,000, but hopefully this yellow barn hits and we're gonna get the
Oh, yeah, we'll be
$1 million.
We'll be having our meetings in the Maldives.
Yeah, but I think though, it's important for us to, as a board over the next, probably, maybe the next year, is to talk about, and we've talked about, how do we continue the IDA in terms of this funding stream, and do we buy a building or that type of stuff? I think it's important for us to continue that, because my concern is the projects, the housing projects are gonna dry up. All right.
And the solar projects are drying up.
For so long, right? So
Where does that leave us?
What's the next
next
wave?
5 years, what is going to happen? And I know we've gone through this before, certainly before our time, me and you were on this, but I think it's important for us to prioritize, what do we feel like we need to do over the, and to your point, maybe not be spending as much, with these community members that come to us and everything, because I think we got to be understanding that these projects, we may be in a dead spot here for
Where we need
housing
to invest in
and so-
something that,
exactly. So if we invested in something like that, where it continues this funding stream, then we're setting up future IDAs to really have some success, I think, is kind of, I think that's where we got to look to, because
I think
there's
that's-
so many more housing projects and, and to Russ's point, maybe the nonprofit does come back, which will help the development corp. We don't know yet, but I think it's important for us to figure out that next, how do we fund this thing going forward?
well, that's something that I really want us to be talking about on Friday.
Yeah.
And I guess we can talk about that in the context of an executive session to talk
Yeah,
about
and
property
Deb, I would
investment.
recommend that we do that, and I'll talk to Steve about it in advance of the meeting, because I might not be there when that comes up, or be virtual when that comes up. I don't think the message that you want to send is that the LDC is not open for business, just that, hey, we got to think about our finances and what we've spent our money on in the past couple of years, and that there's not much money left. And if someone comes and says they want, or the farmer's market come back and said they want another $50,000 or whatever
I'm
it
not
is,
giving it to him.
yeah, we just can't do that right now. I don't
Well,
want to, I
I
wouldn't give
mean,
the
when
message that you're.
Diane Cohen came in and asked for $275,000, that was just like, okay, this has gotten ridiculous.
Yeah, but
Well,
I
they,
think
they,
it's
they think
important
you
for
must
us
have a
to,
money tree in the back of the backyard
Yeah.
that you shake off and grab it. And so,
yeah, I think it's important for us, though. Let's not have that discussion in open session.
No, I don't want to. That's,
Because I want to make sure, I don't want the headlines being,
Yeah,
Development
that's the
Corp's in
last
trouble.
thing. Yeah.
But
yeah, I don't want that
for us to
either.
have that, and I think Kelly, we've kind of tagged you to, you got to have your eyes and ears open and actively go after looking at the next
Oh,
project
absolutely.
for buildings, and do we take this 200 or
2 million.
200 million?
For buying
Take
it.
that and really try and, maximize and utilize that. And it's obviously, it's got to be, it's taxpayers' money. So it's got to be the right
Right.
project. We've got to make sure that we're comfortable with that. But I think it's important
Buy them
for
all.
us to be aggressive. Buy them all
Yeah.
and do what with it.
Burn it to the ground.
No, I think Cayuga Med going in there was definitely a plus. And I just wish there was more that could go in there. You look at like the Scranton Mall and what they've been able to do down there. And even in Johnson City, the Oakdale Mall and the changes.
The
that
real
they've been able
problem
to
is
do.
that this company that bought a controlling interest is just riding it into the ground.
Centralis.
No,
The-
no, no, no,
Cayuga
no,
Med?
not Cayuga Med, the people who own the mall.
Oh,
The-
the Benderson?
No, Benderson, no, it's not
Okay.
Benderson. I can't remember the name of this company. But they bought out the, Eric, Gutzman's
Mm.
family's interests. They have two lines of business, as I understand it. They own a lot of office buildings, most of them medical office buildings, and they make good money on that. And then they buy dying malls and use those as a write-off.
So they just.
And the first thing they did when they bought that mall, and the only reason I know this is because my husband's the mayor, is they wanted to subdivide the mall and they needed they needed variances and a planned unit development overlay because of the zero lot lines and the way they wanted to divide everything up, which is what allowed Cayuga Med to buy their piece. But the common areas that they're supposed to maintain, specifically the ring road and the parking lots, I mean, if you've been up there, they're just,
Potholes.
Yep.
and the stormwater systems and everything else, they just don't do anything to maintain those areas. I think in part because the financing for that would be like a homeowners association where everybody who owns a piece would have to pay a special assessment, and they don't want to charge their people special assessments, but they're having a lot of trouble finding buyers for the empty spaces that they have. And it's kind of a chicken and an egg problem. They don't want to charge more for common area improvements because they don't want to discourage somebody from buying in, but nobody wants to buy in because they're letting the common areas go to hell in a handbasket.
and Kelly, is this the one that we have a call on and whenever it was?
No, tomorrow we have a call about Hillside Acres, the mobile home park.
Okay.
So a buyer came in or made an offer on Hillside Acres mobile home park. As part of that, the people who rent the lots were able to match that offer and request to purchase at the same price. So they've since formed an LLC. They want to buy the property, and we have a call with the management team who does this type of financing to see if they can utilize the bond market for it.
Yeah, and Kelly, and we've talked about this. My take on that one, as I digress here a little bit, is it's going to be another handout. They're looking for money. Mark
Is
my words.
Hillside Acres the one that has the problem with sewage?
No, that's Hanshaw Village.
Oh, okay.
This
'Cause
one
we
is-
just recommended,
Yeah, that one's different.
that's a
Mhm.
different one, okay.
Yep. Yep.
Maybe I'm wrong. but that's my take.
Where would we, how would we give them money?
We would just be the conduit for the bond market.
So it would be an
So we could
LTC
get,
thing?
yes. Mhm.
Oh, okay.
And that's a
But I
stretch,
don't
I
know.
think. Based upon what I know, it's a stretch whether or not they would qualify first for tax exempt bonds, and more importantly, whether or not it's a bankable transaction.
Mhm.
Well,
Yeah,
wouldn't
so
that
that's what
be
we're
up,
finding out
I
tomorrow.
mean, wouldn't that be up to the bond
Yeah,
investors? It wouldn't be up to us.
yeah, it'd be up to whoever their lenders are that
Oh,
are
okay,
willing
all
to
right.
buy the paper, you know.
So maybe for Friday, then let's have at least, for the executive session, let's just have what's in our bank account right now for both. So it's,
Okay.
we got the 139,000 for roughly
Yeah.
the development corp and whatever's in there.
And then if we want to take that further, we'll do it in executive session. Can somebody provide me with the correct wording for the executive?
I think we put it right in here.
Oh,
Executive session to discuss proposed acquisition of real property where the value could be significantly affected by public disclosure.
No, I
Right.
think we'll get to the language, but I think it should be to this, and I'll get the exact words wrong, the discussion about the financials of a particular individual or corporation.
Oh, okay.
And I'll get you the
Thank you.
part of the rub with the state is when IDAs and LDCs go into executive session, they just read everything. And really, there's only one reason to go in executive session, and as we all know, sitting here and virtually, that when you get an executive session, you talk about other stuff. It's just
well,
inevitable.
unless your lawyer's paranoid.
Well, and Russ, we had put this on when we were going to have the meeting on the 11th. We had added the executive session on here and put on the agenda about the discussion of proposed
Yeah, and I
property
think,
acquisition.
and I think that's
Well,
fine.
I can add
Okay.
additional language. We'll
Yeah,
have
because
for
Kelly, if
two
I recall,
purposes.
we were gonna talk, the board was gonna talk about possible land acquisitions for
Right,
development purposes. So you can go in executive session for, multiple reasons, one of which is the land acquisition that you guys are thinking about. The other one would be the discussion of the financials of the LDC.
Right.
And you don't have to identify the entity, but Deb, I'll get you the specific
Thank you.
language that you can read.
okay, that'd be good.
And Kelly, we have a call with Steve set up in advance of the meeting, right?
We do Thursday at 2.
Okay.
Yep. Okay, thanks, Russ.
All right, thank you.
Thank you.
Thanks, Russ.
Take care.
Okay.
Thank you for
Okay,
running the audit committee.
yeah. Actually, and I know with that stuck with Insero because of the county, but I mean, I'll be honest, even though it's immaterial, I was a little disappointed that they didn't catch the, even though it's $25,000, I'm like,
But yeah,
what the
that's
hell are they doing there?
right.
Though they might have been confused about when we got it, because it sounded like they thought we got it in December.
Yeah, but even so, like when they're booking that, like you would think you would actually ask what it was for, because as soon as you guys started talking about it, I mean, I don't know the government
knew.
agencies, but
Yeah.
I'm like, this really isn't revenue. So I was a little
Yeah.
surprised about that. Now we see the correction of the error there, 102.
Right, that one, I know. I was
They
upset
should have
about
caught that on a subsequent event, but they didn't.
Yeah.
But I mean, a little bit of it's a quick turnaround time for our audits.